Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we're now done with day 5 of this range-bound trade, this choppy, lethargic, monotonous trade that if you buy highs, you're wrong, and if you short lows, you're wrong. And just about when everyone gets tired, when everyone starts to throw in the towel, that's when you get the resolution of the range. So don't throw in the towel, don't overtrade. Something's going to give soon. And unfortunately, there's really two sides of this tail, or the tail of the tape, that make a lot of sense. And all day long I'm getting sent notes from very influential big players out there that are showing me how bad it is in Europe and what's really going on in the Spanish banks, how Italy has to be the next to go, that if Greece does leave, the ramifications intertwined are just going to be so hard to absorb. And then you have the guys out there saying that everyone's just fear-mongering and it's not as bad as it looks over there. We just had our normal 11% correction off the highs. We just bounced back. We're holding higher. We're seeing some divergences with the overseas markets, and we're seeing some commitment to the move off the lows. And there's really a argument for both. And each day I feel like I have a different type of conviction. And my gut is telling me not to be bearish, not to be bullish, just not to do as much. I am looking at stocks across the board, and I don't see stocks that I'm just looking to just grab and go with that I'm excited about. So technically, I see more weakness than strength. At times when we're really oversold, I love playing the red dog reversal bounces or this and that, but the oscillator is like up 12. We're not down negative 70, so we're not even oversold. So we're not oversold. I don't see many stocks that I consider awesome stocks that I want to play for a breakout, so there's no real leadership. So it's just kind of lost. If you look at the chart of the SPX, you will see that this was the last time we had a clear-cut macro pattern, and that was right before we got beat up over 100 handles, and most of our community did go to cash there, and a lot of guys got short. It was very calculated, so you had that calculated move. That was then. Okay, now we remember this bear flag. We were talking about that for the continuation of this, and you got a bit of it. When we went below the 200-day, reclaimed it. So the question is, where are we now? And you could say, and I've been pointing to it, you do have somewhat of an inverted head and shoulders pattern here, where you have the left shoulder, you have the head, okay, and then you also have what is the right shoulder, just say right here. So within this pattern, you have micro patterns. One micro pattern being this downtrend. If you were short and you were thinking that we were going to implode, that Greece is going to leave the union, that Italy is not going to get the funding, and there's going to be a run on the Spanish banks, and you were short thinking that we're going to go all the way down to here, if all of a sudden over the weekend Greece gets a rework. And they don't leave the union, which I think they can do everything in their power to keep them in it. But unfortunately, the EU is not going to have a backbone, and they're going to probably let them off of some of their restrictions or their austerity restrictions and give them a better deal and have more private money lose money, and they're going to throw more good money after bad. But anyway, this is that defined level. You go back to the chart here, you will see that this is defined resistance, that if you are short, most people are probably short versus level. Same way if after a move from 14.15, 14.20, put a low in here, 12.66, had a quick move off it. Same way if you were thinking we could bounce back to 13.58, that it's not so bad over there, this and that, you'd be buying it versus this area. Same way if we gave way and we broke 13.06, chances are if you were an uncommitted long, you'd be a seller here, because you'd say, I think we probably retest these lows here. Why not? Typically, if you do get some type of W before going, and V bottoms like we had here are hard to stick, especially in this type of environment. So it's a very choppy scenario, and especially when you have it down, then you go up, then you had the outside day, and then we reversed, and then today we reversed again. So guys buying for a breakout are not being rewarded, and those shorting here are also not making money either. So it's one of those time frames that happen every now and then, and you just have to roll with it. If you go to Lazarus showing, like just say the 34-minute chart, okay, it looks a little bit different. this, I wouldn't say it looks like a head and shoulders pattern. Top, you have an inverted on the daily, and then on the 60-minute, you have the left shoulder, the head, the right shoulder. It's a little loose. It's not a real head and shoulders pattern, but if you'll see here, if we do break this 1306, you're gonna, the next real support isn't back until this whole area here where we gapped up into this gap, 1290. So quite an air pocket. Nobody wants to get caught in an air pocket, and everyone wants to make money short that air pocket, not long it or stop into it. And you can see even better on the spiders, there's a gap there. So here's this gap. Remember we talked about all the people trapped? Well, in this island bottom, okay, this scenario, okay, you had people who got stopped out of their longs, and some people who added shorts, and then we had the gap up. So this whole group of people are trapped, and that gives you pent up energy, typically to the upside, and that's what you saw. You saw it quick. But now if you just look here, it does look as it's, as if we break this area, 131.50, 131.20-ish. Next level, really, you have a small little micro spot right here, but then it's the gap to test. So, it's like here's a level, here's a level, here's a level, and what's frustrating is each time it looks like it wants to hold higher for a move, it fails. Same way when it looks like it wants to hold lower to be short, it fails, and that's what it does. And when you're in a range-bound trade, it frustrates everybody. So at this point, I just, again, think less is more. Today there were some clues, though. I know I had a long bias today that actually helped me, and I think the stream and the community helped me because the VIX was making highs when the market was also making highs, not confirming what could have been a rally. And if you look at the VIX here, you will see, the VIX really, besides the last little second there on the daily, was near the highs of the day. It closed a little bit off, but it was near the highs for most of the day. So go to the 5-minute chart. Besides this last little push here, like the all morning long, it was going higher, and then even into this that last move when the spiders tried to break out around 130-ish. The spies were at the highs, and the VIX was all the way here, not at the lows. So if you take a quick look here at the VIX, you'll see this was let's just see what this bar was. So this was 210. The VIX was at the highs, and if you go to your spiders, you will see that right around 2 o'clock-ish, okay, or even go before that. So 1 o'clock, the spiders were at the highs, right? And the VIX was also at around 1 o'clock at the highs. So right there, that's a divergence that you have to just pay attention to. But anyway, there were some clues to give you that we could potentially fail. Another one was Apple. Apple, I tweeted about 579, 581. That's where you had the reversal bar. That was the outside day sell signal. And if the bears had control, they were going to defend that. And it hovered there all day long before failing. Laz caught that short. I wasn't involved in it. And now if you look at Apple, you'll see on the daily chart, it's not, I would say it's obviously not game over. The bears don't have the balls, in their hands, and they're running away with it. But when you get an outside day into a key resistance area, you have to just take notice. And at this point, it led to nothing. But I would just say watch this very closely, because if Apple starts to break below this 566-ish area, the 100-day comes in. You have a little bit of an uptrend here. Like you have a low, a higher low. It could do it again, and then you have the 100-day right down there. So this was at least a clue that we weren't going to get momentum there. And at this point, I think guys have a nice inside range to trade against. On a macro level, if you're long Apple for the last few years, I still think you stay long Apple. But intermediate, this is something to watch to trade against. Some guys are going to be trading short against this 580, and some guys are trading long, versus 566, and that's what makes the market. And then today you had JP Morgan strong most of the day. It pushed through 34.40. Banks really didn't participate with it. The market was still lethargic with that, so it gave you some signs that we were still weaker than stronger, because with JP Morgan at highs, you would have thought we would have been up more, and we weren't. And then JP Morgan, it didn't close horrendous, but it pushed through this resistance, gave guys a nice trade, and then didn't have enough power to close above it. I still think it needs time. All in all, a lot of tactical guys they've had it long since they actually announced that big $4.2 billion loss today. Remember, it was lower, went positive. Since then, it's been bouncy more than a short. And it could continue and has some room, but it's something we'll watch tomorrow now that the testimony's out of the way. But really, the banks were not going. Look at, like, JP Morgan made a new move high here. Look at Goldman Sachs, just for instance, didn't even come close. Right? See this lower range in Goldman Sachs? Didn't even want to poke its head above it the way JP Morgan did. Let's see Bank of America. Bank of America. Different type of pattern, I guess, here. It didn't poke its head up above this recent low range also, but it's acting, the pattern is actually a little bit better than Goldman. It's holding here, it's wedging again. The question is, will it be able to get above this? So Bank of America, pattern-wise, looks a little bit better than Goldman. What did Morgan Stanley do? That looks like Bank of America's pattern, where you have a nice tight flag pattern after a 2-day move, and it's been holding, so there's been some commitment to it. But again, none of the banks had enough strength to push through recent pivot areas. So it didn't push through here. Either did Bank of America, either did Goldman, whereas JP Morgan tried and nothing else went with it. So that was a bit of a divergence there. Let's see, what did Wells Fargo do? Wells Fargo is actually acting a bit better than the other banks. It's been acting better than, it has the Buffett love behind it. This out of all of them looks, as an investment, people are taking the least amount of pain here. It's still above the 200-day. It's held the 30 support. Look where the low here in December was. The low here in December was 23. If you go to JP Morgan, it became a stone throw away from that, whereas Wells Fargo comparatively is holding up almost up here. So it just shows you that I guess stock pickers still are allowed to have less pain if they're in the right names, and Wells Fargo is a better name to be in versus JP Morgan. And at some point, Wells Fargo, if the market gets going, could probably be one of the first of these bigger guys to start and get back in motion. So with that said, you also have stocks that are continuing to break down after bad earnings, like Lulu. Lulu, you really, if you're long it on a macro basis, just take a little bit of care. Came out with earnings. It was the first time in a long time. It didn't even fill the gap. Didn't even come close to filling the gap. Look at this pro gap right here. Pro gaps typically lead to further downside, and then today you had a little bit of that downside. It tried to reverse yesterday, engulfed it. If it doesn't hold this 200-day, this gap is going to be tested. Same way here. You had a big upside gap that led to a monster move. This is just the beginning of what could be a lower move with this gap. Okay, so just be a bit careful there. Google also still just trading lower. Most guys that are in my community know that I was bullish on Google earlier this year, right around here when it looked like it was going to break out, and it did, and then got negated. Then you had this big gap down that wound up getting filled. So, it had another chance. And then last quarter, people didn't like what they saw, sold it off again. So right here, this is when I said, listen, I understand that it looked better coming into this year, but we trade real time. This is your spot to get out. 596-ish was the 200-day. If you listen to that, you saved yourself almost 30 points worth of pain, and you wouldn't be thinking to yourself, oh my goodness, Google looks like it's about to break another macro level. What do I do now? Here you could actually, if you sold it correctly, you play little scalps. But overall, if this is the first candidate to continue lower if the market turns down. Amazon, still neither here or there. It's still holding the majority of this earnings gap. Short term, just very choppy. No real good trades there, but it is holding a bit higher. If this were to start, if the market had some traction, I think that this would be a candidate to break above this 220. eBay also still hanging around up here. But again, markets aren't letting things break out. Every breakout's actually being almost like a distribution channel that they're using it to sell. So at this point, you have this overall channel here. As long as, I guess, it holds the upper end, there will be some pent-up momentum. But if it starts breaking this, then it's right back to the lower end, and it's the same old range trade as the market tries to figure it out. Facebook did what Facebook does, failed again today. Still, no traction there. Everyone says we're going to stop trading, including me, including Sperling. We all go back there for a trade because we all think it's Facebook. It's going to one day be different, but still gross. still opened here, not getting any traction as it tries to come back up. Tried to push through this high here of 28.07, went as high as 28.10, 3 cents higher before failing. So at this point, it does feel like it can continue to the downside here. So if you were trading it long versus this low here, make sure 25.52 is your stop. And if you want to cheat and get out a little earlier, I would say if it starts breaking below 26.80, I wouldn't even wait, for this low here, but that's me. So all in all, I think that there's arguments for both sides. I don't see any stock that I'm jumping out of my skin to buy right here. I think cash is king still. I think if you sold correctly and you dipped your little toe in when we were really oversold down -70 below 1280-ish, which was a decent spot, maybe stay with it. But if you're trading the intermediate trend and you're looking to get a move that could last for a few days from this spot, I don't have a clear-cut answer on which way we go. So we're going to watch to see how 1307 comes into play and overlay all the other leading stocks, and then we'll see if we get back up there and we start testing 1335 again, and then we'll also see how the leaders act. So I have a few different plans. I'm going to wait for the market to confirm it, and when it does, I'm going to try and jump in, ride the momentum, which we haven't had recently, and go with it. And if I happen to miss it and it's overnight, if I'm not taking the risk on it, I don't deserve to be in it. And if you're not taking the risk to be involved, then you don't deserve it as well. If you're thinking short, you have a short thesis, and you know we're going to test, the 1266, obviously you have a stronger thesis than I do, then you should have some puts on, and you should, have to be involved in some shorts just in case we get a 20-handle down move. Same way if you think the low is in, our economy is doing okay, everything over there is being exasperated or whatever that word is, then you have to have a little long because you need some risk if we're going to gap up. For me, my thesis is not that strong. I'm going to tactically take trades until I have more clarity, and then that's when I'll start putting some more money to work. Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.